The banking industry is not looking so good. Just yesterday, we were talking about Silvergate and how they were in trouble of collapsing and voluntarily liquidating all of their assets to give the money back to depositors. They were having a bunch of troubles. Now we see the 16th largest bank in the US actually being taken over by regulators and them seemingly collapsing. That would be the Silicon Valley Bank. They are a pretty large bank. They have like 208 or 210 billion dollars in deposits, and that is all at risk right now. We can see here from this tweet, Silicon Valley Bank has been closed by regulators, which are now in charge of the bank's deposits, according to a release sent out by the Federal Deposit Insurance Corporation. That's the FDIC. If you have $250,000 in an account or less, you can get covered by FDIC, and you're not going to lose your money. You're insured that money. Anything above that in that account, though, you're at risk of losing if the bank goes under or has problems like we're seeing right now with at least two banks. And these are the numbers right here. The bank is the largest bank to collapse since 2008, and the Silicon Valley was the 16th largest bank, holding $210 billion in assets. So obviously not great numbers, right? You see a very large bank, 16th largest, not insanely large, but $210 billion is a lot of money. And now that's all up in arms. I think the vast majority of it is actually unsecured, which is a big problem. You can see right here, this is only 2.7% of Silicon Valley Bank deposits are less than $250,000, meaning 97.3% aren't FDIC insured. So that is a big problem, right? That means the vast majority of that $210 billion isn't secured. It's gone. It's up in the air. Maybe you'll get a portion of that back, but you're not insured. Less than 3% of the people there are not insured. And I do think the majority of people who are above the FDIC who are involved in this bank are corporate accounts, so they're businesses. They're still at risk of losing a lot of money if this bank can't liquidate and get them back their money, right? Because they're not insured. So that's how a rippling effect starts. That's how you get things getting worse and worse. You have this one bank fall, but a company or a big company has some of their money there. That means that they are now affected. That money is now untouchable until some sort of liquidation takes place. Who knows how long that could take? And you're probably not going to get back all of your money. You're going to get back a fraction of it. Maybe you get back 50%, 60% would probably be good. If you're lucky, you get 70, 80, but you're not getting the whole thing back. And this is their plan to give people their money back, insured or uninsured. This is their thing they're going through right here. Insured depositors will have access to their money, their insured deposits by Monday morning. FDIC will pay uninsured depositor an advanced dividend and receivership certificate for the remaining amount of their uninsured funds. As the FDIC sells the assets of Silicon Valley Bank, future dividend payments may be made to uninsured depositors. So that's where the money is being planned to come from, right? You have insured depositors, you're going to get your money back. Less than 250K in your account, you're insured, you're going to get your money back by Monday. But uninsured, the vast majority, 97% of people, you're going to have to wait. You're going to get some money back. You're probably going to get $250,000 as the insurance stuff. But then you're going to have to wait until the assets get liquidated and they can pay you dividends from that. So they can liquidate the assets, pay you some money. Liquidate more assets, pay you some money. Chances are you're not going to get all of your money back. You're going to get a fraction of your money back, and it's going to have ripple effects for the companies involved in losing money here because they didn't plan on losing money in their bank account. And you can look at some of the bank stocks today. First Republic down 20%, Western Alliance down 42, PacWest down 37, and Signature Bank, the other crypto bank, down 26% just today in one day. Now, if you look at the big banks, it's not that bad. Goldman Sachs down 4%, JP Morgan actually up today, and you go out and it's -6 for the week, 5 for the month, but it's actually up for 3 months, and the year it's actually up too. So the big banks, they're not that in trouble. Goldman Sachs is a little bit worse. The week 8%, 11% for the month, still down for 3 months, but even for the year, basically flatline. So the big banks, the big guys, they're probably the least impacted of this, right? They have the most amount of money, they have the most amount of assets, and the most amount of access to liquidity. But the smaller banks, they're the ones who are getting in trouble. They're the ones who are shutting down. We've seen the two fail already. Silvergate was one. People started blaming crypto, saying, see, this is what happens when crypto gets involved. Even though I don't know how you make that correlation. But now we're seeing the 16th largest bank in the US go down with $210 billion worth of assets, with the majority of them uninsured. And there's been a lot of news from other companies coming out having to say that they had money there. I think Roku came out and said they had money there. They had like 20 something percent of their cash in that bank. So they're in trouble. There's like ripple effects from that. But the bigger problem is, will this cause a big panic? Are people going to panic and not trust the banks? This is a big bank going down, the biggest since 2008, not necessarily the time period you really want to be comparing to. And if that's to happen, if people panic and bank run any bank, that bank stands a chance of collapsing. Maybe the big banks, like the big four, they can hold on the longest. They obviously have the most amount of cash, the most amount of access to liquidity. They have the most amount of money, but all these other smaller banks that are smaller than the big banks, right? 210 billion is a smaller bank, but it's still a ton of money. Those are the ones in trouble. If people panic and go to their bank and want to pull out their money, and everybody does it at once, then you have massive problems. Now, will people do that? Who knows, right? You got to wonder, if you're going to pull all your money out of the bank, where are you going to put it? How are you going to pay bills? How are you're not going to pay for everything in cash, right? So it's just logistically, it's very tough because people still need bank accounts, right? You still need to pay your bills. You still need to move money around. You still need to get paid from your job. Most people direct deposit. You're not getting paid in cash. So there's a lot of things that maybe they wouldn't do a bank run, because where are you going to put your money? And then you're still going to need the account, right? So maybe that's like a thing that can protect banks right now. But right now, a lot of things that can ensue panic. And if that goes down, banks are in trouble. And you already know we have Jim Cramer. He is undefeated on these calls. You can see him here saying, another low light with Silicon Valley Bank. He said just a month ago, Cramer claims stocks still cheap and fears were not justified regarding last year's sell-off, talking about the Silicon Bank. And now we have that bank collapsing, taken over by regulators, and seeing where they go. So Jim Cramer hits the nail on the head yet again. He never misses. And I'm pretty sure, didn't Jim Cramer say Lehman Brothers was all right before they collapsed in 2008? I'm pretty sure he said that. So, maybe the whole thing's playing over again. So it's not going to be fun if that's the case. So kind of a really crazy time, right? Banks are falling left and right here. We had the Silvergate. We got SVB now. Who's next? Is there another bank that's going to fall? It seems like things are starting to break with this rate hikes, and we all knew something was bound to break. And now we're seeing banks start to fail, which is never a good sign. So we just have to wait and see who's next, right? Is there another bank that falls, or is this the last one? Was this a controlled event? There's no contagion. Who knows? That's going to do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next video.